Every time this ratio breaks, something big follows. This is the ultimate guide to the gold-silver ratio. Why does the ratio matter now? Well, once again, the gold-silver ratio has recently exceeded 100 to 1, with silver now catching a bid. Most consider this ratio to simply reflect the price relationship between gold and silver, specifically the number of ounces of silver that can be purchased with 1 ounce of gold. But for millennia, this ratio has been exploited by international money powers. What many fail to realize is the GSR has also acted as a hidden barometer of systemic health, a signal of underlying economic power plays. As gold remains a key reserve asset for central banks, the ratio's movement becomes less about natural market dynamics and more about the managed perception of value, a key tool of influence, capital flows, and increasingly a signal of underlying stress. It's no different today. In March 2020, the GSR hit a historic high of over 125 to 1. The spike didn't just reflect market volatility, it signaled extreme systemic stress, a global liquidity crunch, and massive dislocation in financial markets. And when the ratio fell sharply in the months that followed, it wasn't recovery. It was fiat strain, inflation expectations, and silver playing catch up. So what is the GSR really? Well, most see it as a price relationship, but over centuries it's been used by empires, governments, and central banks as a policy tool to manage money supply, control trade, and uphold confidence in paper currencies. It acts a little like a monetary MRI, revealing fractures long before they surface. In ancient Rome, the GSR was fixed by law at 12 to 1, illustrating silver's monetary parity with gold. During the 19th century gold standard era, Britain held the GSR around 15.5 to 1, aligning with the global bimetallic system. By the time of the 1934 US Gold Reserve Act, the ratio widened as silver was effectively demonetized and gold revalued, marking a systemic shift. The 1971 Nixon shock, which severed the dollar's link to gold, saw the GSR climb above 40 to 1, ushering in the fiat era. In 1980, silver spiked $50 and the GSR fell briefly below 17 to 1, reflecting public panic and inflation fears. Fast forward to 2020 and the GSR blew past 125 to 1, indicating turmoil and ongoing silver suppression. Gold-silver ratio is a monetary alarm bell. From the Qing dynasty's silver standard collapse to Weimar Germany's hyperinflation and the fall of Bretton Woods, spikes in the gold-silver ratio have often signaled major monetary shifts. These aren't just market quirks, they reflect deep structural changes. Gold, centralized, hoarded, institutional. Silver, decentralized, accessible, sidelined in official narratives. This dynamic masks silver's role as a grassroots currency, sounding the alarm on inflation, debasement, and systemic fragility. Credit versus collateral, a shift in sentiment. As economies prioritize synthetic credit over tangible value, the GSR mirrors this distortion. Gold sits in central banks' vaults as a hedge, while silver being marginalized, not because it's obsolete, but because it challenges the illusion of control. GSR hitting 100 to 1 or higher signals a disconnect from reality, fueled by leverage. So when inflation surges, silver often rebounds sharply, pulling the GSR down in a swift revaluation. Institutional control versus grassroots power. Gold is the domain of institutions like the BIS, the Fed, ECB, while silver is physical, divisible, and popular. A rising GSR therefore reflects centralization. Fear and greed in the ratio. Gold rises with fear, wars, crashes, recessions. Silver surges when fear meets inflation, driving that explosive volatility. A high GSR indicates fear-driven markets. A falling ratio suggests hope, inflation, and a repricing of real assets. Market manipulation and silver suppression. Silver's paper market, dominated by futures contracts, is leveraged over 100 to 1, making it ripe for manipulation. Major banks like JP Morgan, who were fined $920 million in 2020 for spoofing, have distorted silver prices, artificially inflating the GSR. This isn't speculation, it's documented fact. Wealth stratification and the GSR. Gold is the asset of central banks and elites. Silver has long been the currency of trade and the working class. A rising GSR throughout history mirrors rising wealth inequality. Historically, many viewed silver's effective demonetization, particularly after the 1873 Coinage Act in the US, as a deliberate attack on the working class, stripping them of tangible, accessible store of value. This shift devalued Labour's wealth-pushing economies towards fiat and credit systems that favoured creditors. Meanwhile, gold-hoarding institutions such as central banks and financial giants consolidated control, benefiting from gold scarcity and institutional backing. Today, silver appears to be catching an overdue bid, with rising demand signalling a potential revaluation as investors and the public rediscover its monetary and industrial value. A signal of repricing. The GSR as a timing indicator. The GSR's long-term average hovers around 60 to 1. When it stretches far above, such as 71 to 1 in 2008, 83 to 1 in 2016, or 125 to 1 in 2020, a sharp silver rally often follows. While the GSR has recently hit that 100 to 1 mark again, it has coincided with growing concerns about the gold market's stability, with the ECB coming out with warnings that gold's role in global finance could trigger the next financial crisis, highlighting vulnerabilities in the over-leveraged system. A falling GSR isn't subtle, it signals cracks in confidence, credibility, or currency itself. Why the GSR matters. The gold-silver ratio is a diagnostic tool for the financial system, revealing monetary stress, market manipulation, social imbalance, erosion of trust in fiat. Therefore, a spiking GSR shows silver's suppression, and a falling ratio indicates strain. When the ratio normalizes, it heralds a revaluation where silver has finally exposed the fragility of a debt-driven system. And so what does history tell us? Well, in an era of debt, inflation, and centralization, it's worth diversifying into hard assets: gold, silver, land, skills, and community. It's worth studying monetary history. It repeats more than you could possibly think. Support decentralization through local economies and independent systems. Hold your ground, hold your silver, and stay vigilant. The higher the GSR, the louder the alarm. Thanks so much for watching. Do consider subscribing, and I'll see you next time. Bye-bye.